Hello, and a very warm welcome to the Susty Talks podcast from Edie. This is the podcast for anyone working in or passionate about creating a sustainable future, where you can hear from sustainability and energy leaders, even if you only have 20 minutes to spare. And today it's great to be joined on the line by two experts in renewable energy finance from Santander UK. I have Ben Smith, who is Head of Specialised and Project Finance, and Katie Bagshaw, who is Director of Specialised and Project Finance. Ben and Katie, thank you both so much for your time. How are you?
Very well, thank you.
Well, thank you, Seth.
Great. Fantastic to have you both on and to hear from people with such a rich experience in financing in this space. So it'd be great to hear a little bit about both of you in your own words. So Ben, I'll start with you.
Thanks, Sarah. So Katie and I are part of Santander Group, and we sit within Santander UK PLC, which is the ring-fenced bank in the UK. The Specialised and Project Finance team specialises in two key areas. One is project finance, which is relatively easy to understand and is probably the bulk of what we'll be talking about today, because most of our renewables and related areas in terms of our finance do sit in that area. We do have this other side, specialised finance, which is a bit of a broader church with a few different areas of interest. And sometimes we find that there's some sustainable opportunities in that field as well. The team split into two sides. One's origination and structuring. So they tend to focus on new transactions for new clients and new sponsors. And then the other side is the asset management and strategy side, which I'll hand over to Katie to talk about.
Thank you, Ben. Yeah, so I lead on our asset management and strategy work within the team. On the asset management side, that means looking after all of the transactions that we've written. So we have a team of experts who are used to monitoring those names, paying particularly close attention to those higher risk transactions. So that might be projects which are in construction or perhaps new sectors or markets for us. And then on the strategy side of the work, we look at all the different initiatives that impact the work that we do more broadly across the team. A lot of that is sustainability focused, so looking at our green finance efforts in particular, and also working closely with government to help develop some of their agenda as well.
So we can really dive into all of that, really looking at the strategy past, the strategy present and future, and some of that policy work. And when we look at the past, Santander has financed renewables now for several decades. So back when the markets were not as mature as they are now for technologies like wind, for example. So Ben, how has the approach to financing these projects changed as they've matured over the years and as policy has shifted?
Yeah, the landscape's changed a great deal. And as you said, Santander was right in there at the very beginning in many different territories, not just the UK. In some ways, at the outset, it was easier, and in some ways it was harder. So the bit that really helped at the time was some of the subsidies that the UK had, which meant that the revenue certainty on an onshore wind or solar project was very high, and it was quite easy to bank and structure around. Over time, that subsidy was removed and replaced with what we have today, which is contracts for difference or CFD. That still gives a high degree of predictability when we're looking at future cash flows, which can go out well beyond a decade. But equally at the same time, not every project will be backed by a CFD, which has led to other forms of offtake. So other forms of contractual arrangements for purchasing the energy that's produced from that wind farm or that solar farm. And this has led to corporate PPAs, where you have corporations that are essentially buying the power over a long period of time for a fixed price. The industry's got quite good at structuring around that. The difficult part really has been the evolution of taking ever more merchant risk. Merchant risk is essentially where the bank takes a view on the future power price. That's inherently hard to forecast and quite difficult for banks to wrap their heads around. But we have seen over the last few years banks getting ever more comfortable with that risk and structures that are beginning to seemingly work quite well. I mean, outside of that revenue predictability, I think the other evolution we've seen in the market is the technology itself. So huge growth in offshore wind farms, a return to growth, I think, for onshore, and also related areas that are needed to stabilise the grid, along with having a more renewable energy production in the UK. So this is things like battery energy storage solutions, gas peakers, and we're just now seeing the market move to long duration energy storage as well. So different technologies there. So it's an ever evolving industry. And we're also seeing that the types of investors that are coming in are becoming more sophisticated, larger. And with that, we're seeing the growth increase at an ever faster rate.
Great. So a lot of success stories there, and something that stood out to me when I was preparing for this episode was that I noticed that globally, Santander Group reached its goal of mobilising 120 billion euros in green finance between 2019 and 2025, 18 months ahead of schedule. So when you're looking at that in terms of the role that renewables and that Santander UK are playing in that, Katie, how are you defining green finance, and how important are renewables and clean tech financing in that green finance strategy?
So green finance means lots of different things to lots of different people. Within Santander, across the group, we have a single form of our green finance classification system. And that system has been defined by the experts within our group with reference to industry guidelines and standards internationally. And at a high level, the system sets out those sectors which we consider to be green. And against those, it overlays various financing parameters which we need to meet. So those financing parameters are one of three things. We either need to be able to demonstrate that the money we're advancing to a borrower is being used for a green activity, or that our borrower is generating a specified percentage of its revenues from a green activity, or that we are deploying green loan principles, which is an industry standard LMA approach. So everyone across the group uses that system to define green finance, and you're absolutely right. Measuring against that criteria, we surpassed our target. So between 2019 and 2024, the group delivered 139 billion of green finance, and Santander UK was a significant contributor towards that number. Looking at the ring fence bank in the UK alone, we delivered 20 billion over that time period. Looking then to your question around, what role does renewables play in that? Certainly in the early days, renewable energy projects were probably the lion's share of that number. As things have moved on with the passage of time, that has changed slightly. So renewables is still a very important part and continues to grow. But the good news is that we see other things coming in to meet that target as well. So we've seen real growth in green finance activity within real estate, for example, or in linked loans. So today, green finance is a really broad mix, and renewable energy continues to play a really important part in that mix.
I will say, Katie, it's great to hear some success stories about the growth there, because sometimes when you look in the news, there's so much about the challenges, high capital costs, finding skilled workers, dealing with ever-changing global supply chains in renewable energies. So, Ben, when you look out to the coming years and want to keep this momentum up, what are the main challenges that are facing investors in renewables and clean tech like yourselves, and how are you planning ahead?
The largest challenge is probably just the scale of growth. If you look at what the UK is trying to do with decarbonising the grid, at the same time as some ambitions plans when it comes down to infrastructure across the UK more broadly, I mean, naturally that's going to put quite a bit of strain on supply chains, on skilled labour. And we're also in a period where, there's been significant inflation, higher interest rate costs, and therefore the cost of capital is more expensive. And of course, we are also competing with the investment opportunity in other sectors and in other countries. So the challenge really is twofold. How do we continue to deliver at pace and at the sort of lofty ambitions that the UK has set itself with regards to decarbonising the grid? And at the same time, how do we provide the financing of that whilst keeping those costs down to make the investable proposition attractive versus alternatives? And really there, we've done quite a lot of work with government around what they can do to support the sector. And hopefully we'll have a chance to talk a bit about that. And from a financing standpoint, I mean, I'm yet to hear a client that will say that we're too cheap. But we do work very hard to always make sure that we're providing good value for money. And generally speaking, I think that the bank's role in that is really finding ways of getting as much debt into the financing structure as possible, which for us probably means taking as much risk as we possibly can, because we do tend to be the cheapest form of capital. And of course, our other role is facilitating debt and bringing in other investors that have similar appetite and who also are able to finance as cheap or more cheaply for longer periods of time.
As you mentioned, this really is the time for businesses and finance to be engaging with the government. As you said, the scale of growth needed to meet the ambitions of this government and just the need of the challenge on a global scale, on a national scale, is unprecedented. So I think you mentioned you've been engaging. It would be great to hear a little bit about the specific asks, what you're going to the government and saying, this is how you can further support the development of renewable energy investment in the UK.
Yes, the current government does seem committed to rolling out the solution, and they're looking for input from the financial community as to how we could support them doing that. I mean, from our standpoint as a bank, we regularly meet with DESNES, who have been very good at listening to the advice and requests of the finance sector as a whole. We also work with NESO. I think they're interested to hear our thoughts on how the sector is going to be able to transition as they need to decarbonise the grid and everything that comes with that, because there is an awful lot of CapEx spend that needs to be deployed. The headline for us probably would be the work that we've done with the British Infrastructure Task Force, which is the Chancellor's task force coming out of the HMT. There's three main pillars of that task force. One is the transportation sector, one is real estate and housing, and then the third one is energy. We're co-chairing the energy stream with HSBC. We can't talk about everything that we're recommending, nor the findings, albeit I do think that there will be things that will be released in due course. But generally speaking, we are trying to tackle known issues such as those related to skilled labour. We're trying to find ways of shortening the supply chain and ensuring that key bits of equipment are available on time at a sensible price, and also that ensuring that the financial community is able to turn up and provide the significant amounts of financing that are required, not just across the next decade, but beyond. And a lot of thought has gone into how we can crowd in more financial institutions which have even larger balance sheets and even lower costs of liquidity, so we can continue to see the revolving churn of balance sheets, so that those that are able to finance from the outset can continue to finance, and we don't have what is effectively gridlock, which could easily happen given the rate of growth that we have to see.
And it's great to hear about the work of the task force, and it touches on so many important pieces like the supply chain piece, and acknowledging that this doesn't end at 2030. This is a long-term transition, but I think that at the moment something else the government is dealing with is like the narrative of selling the wider benefits of aligning the energy transition with its wider bid for growth, resilience and national security, and to improve the lives of the general public. So how can renewable energy support that, and how can we tell a better story beyond just the environmental, the carbon benefits of the energy transition?
Yeah, I think this is an important part of how we can make sure that things happen at the pace that everyone would like. I think recent geopolitical events have really shone a light on the vulnerability of the existing grid and the impact that can have on individuals and businesses. The UK has been known to have had slower growth than it would like. I think one of the reasons the growth has potentially been as slow as it has has been to do with the cost of our energy compared to other countries. For us, given our natural resources within the UK, really the answer is to have more renewable energy. And that should, in time, bring down the cost of energy and make it more predictable as well. So that events that happen overseas won't result in a price spike. I think beyond that, being able to produce our own power and not be reliant on other countries is also part of the energy security point that's being talked about a lot now as well.
Ben, you've flagged a lot of opportunities there, some coming up, as you mentioned, for not immediately, that will build in over the medium to the long term. And I'd love to continue on that positive note. So, Katie, what specifically excites you at the moment in the UK about clean tech and renewable energy and energy systems investment?
I think it is a really exciting time for renewables and clean tech. And for me, I think there's three key reasons why I do think it's exciting. I think firstly, it's the scale of the opportunity that we see and the pace of change that's going to demand, and something that Ben's spoken about already. So I think to reach Clean Power 2030, the government's saying that we will need 40 billion of investment each year. That's a huge number. It's a challenge, but it's also an exciting opportunity, both for existing technologies and also new technologies. And I think the pace of change that I've seen working in renewables over the last decade or so will at least continue and more than likely accelerate. Secondly, I think it's really great to be in an area of banking where you can go out and see the difference that you're making. So I really like going out to see the projects that we're funding and knowing that those form a really important part of the country's sustainability agenda is really exciting for me. And then finally, it's those broader benefits that we've spoken about. So the work that we do has real environmental benefits, but also we like to think economic and energy security benefits as well. And I feel very proud of the work that we do.
Great. And Ben, I'd come on to you as well for your closing thoughts. What keeps you excited about working in this space in 2025?
I worry I'm going to sound very much like Katie, but for me, it's very similar. The scale of the challenge is vast. And that's something that's quite exciting to try to tackle. The complexity of it keeps it interesting and adds further to the challenge. And it does also feel, as Katie said, that what we're spending our time doing, what we're financing, actually has a positive impact, which is, I think, quite a nice thing to be able to say.
Great. I'd say from my perspective, it's great to get that finance perspective when I normally talk to the heads of sustainability that are maybe signing the PPAs, and to know that even the finance experts know this is a really big challenge, but so exciting to work on. Thank you, Ben and Katie, so much for taking the time to appear on the Susty Talks podcast on the ED Extra channel. But that is all the time we've got for the discussion today. So thank you both so much for your time. Hopefully catch up soon.
Thanks, Sarah.
Thank you.